Welcome to Resource Revolution, the resource management podcast. I'm your host, Christine Robinson, and on this podcast, we will discuss the real-life experiences of people in and around the world of resource management. Today, we have Charlie Ross joining us. Charlie is a partner at Cow Corner. Welcome, Charlie. And now you might be wondering, and Charlie, you might be as well, what is a partner from a private equity firm doing on a podcast about resource management? Well, any strong resource manager knows that in order to really drive value and do well within this space, you need to understand the industry that you're supporting, the market that you're operating in. And there's been a lot of buzz lately around PE and accounting. So let's dig into that. Charlie, can you tell us what is going on with PE and accounting?
Sure. Well, how long have we got? We could fill the podcast with just this. I spend lots and lots of my time trying to articulate and think about exactly what I'm doing here and why we are investing in accounting. But as an accountant myself, I understood lots of the pain points that the traditional model of a partnership brings with it in the accountancy sector. Listen, there are loads of advantages of that partnership, stability, and a long-term approach to keeping the firm running. But what it also brings is some stagnancy and some misalignment between partners who are approaching the final few years of their career and the partners of tomorrow and the people that are driving that firm forward. And what that often meant was a misalignment about decision-making. In-year decision-making versus decision-making for the 10 years. Private equity got interested in this market because it felt like it could realign those partners, realign that model from the partnership model to a limited company model, a corporate model that makes longer-term investment in both people, but then its technology and the support functions to try and create long-term growth. So we spotted a long-term growth opportunity that was probably going to be hard to unlock unless actually you fundamentally changed the mindset and the ownership structure.
Very interesting. That's certainly a change. It's a departure from the traditional model of the accounting firm that many of us have grown up in, that many have been used to and perhaps even aspired to from a career perspective. Yeah. So it's interesting. Would love to get your perspective then on what are the benefits then for firms to move ahead within this structure?
So if you think about what I said around the longer term mindset, that actually linked to that one statement really links off all of the other benefits. What it allows the firms to do is take more risks that might not pay off in year. So the traditional model says, hey, if we hire a tax manager, they best pay for themselves this year or my drawings go down. Hey, if we invest in technology, this best pay back straight away or I'm going to earn less this year. And actually, hey, if I put some time into resourcing and resource management, that better have a payback straight away or otherwise it's not a good idea. Whereas I'm thinking about this from a 3, a 5, a 10, a 15-year horizon that says, where is this industry heading? And working backwards, where do we need to invest to make sure that we are going to grow faster than everybody else, that we are sustainable, that actually we're taking advantage of some of the long-term trends. And so the main advantage is I can make a bet this year that won't pay back for 3 years, right? So I can invest in a technology solution stack that might actually be really annoying to implement now. But next year, it'll make everybody happier. And in year 2 or year 3, it might make everybody richer, right? And that long-term approach to that return on investment and that mindset is probably the main advantage.
That's really interesting, I think, in particular for many, many reasons, right? That you pretty much touched on, I would say, almost every component of not only the operational structure, but of course the client-facing structure as well within an accounting firm. Being someone that has grown up in the operational, internal, inner workings of a firm of that nature, what would you say for those internal operational functions? Do they have anything to fear as it relates to this? Is there anything that they can do to prepare?
Yeah, listen, one of the main worries whenever you see private equity investment or VC investment, or actually fundamentally just change to that ownership structure, is the fear that there will be change and that there'll be costs, right? That people are going to be more profit mindset. I did say return over the long term, right? That's still a profit measure ultimately, rather than
Absolutely.
a people measure or a softer measure. And that fear of that is going to effectively impact what you do today for the worse rather than for the better. And listen, for the most part, what an external investor brings you is slightly more rigor. And that rigor, I would argue, is always a good thing, even if it does unearth some changes where there is some wasted spend, where there is some wasted allocation of time or resources. But also what it does is it shines a light on the areas that are underinvested and where actually they've probably been under a rock for a long time and not been valued by the chargeable part of the business. So, we are talking about resourcing here. Fundamentally, the resource function and resource tools, I think, is often overlooked by the chargeable part of this business about just how important a well-run resource function is from a poorly resource function, and the impact that has on both the day-to-day lives of the chargeable people, but also on the business outcomes, on the revenue and on the profit outcomes, right? And so actually, I would argue for this particular example, this investment, this change in approach, and this light shining on the non-chargeable part of the business will be a really positive thing for the resource function. Because fundamentally, the reason you asked me before, Christine, why do we like accounting services? Yes, there's that opportunity to change the mindset, but fundamentally, this is what we'd call a skills shortage market or a supply-led model. There are a shortage of good people, not a shortage of good clients. If you asked every partner what's the barrier to growing the business, it is getting and attracting and retaining the best people. And if they had more tax managers, then they could do more tax work for their clients. If they could retain that great tax manager rather than leaving, then that time, energy, effort they've put into developing that manager could bear fruit next year. And actually, if they had a tool that allowed them to resource that tax manager across the whole tax ecosystem, you could get more out of that person. So actually, in a funny way, the shift to investment mindset of private equity is going to demonstrate just the huge value that the resource management function and the tools and the software that function use is doing and having an impact on the business. Does that make sense?
It makes a lot of sense. And I love to hear that, Charlie, because one of the things that I would say from a resource management perspective has been probably a challenge and certainly a source of frustration has been, people are not necessarily aware of what resource management is and what resource managers can bring to the table in terms of really being that business partner, right? Helping them to understand where the iceberg is in the distance, so to speak, and understanding, right, where people are, what they're doing, and bringing that talent retention and attraction component in that you just touched upon, I think is huge. So I love to hear that. I think that's fantastic. It really bodes well, I would say, for the future of the function. And I would also add to, I'd venture to say that folks that don't necessarily see it that way probably don't completely understand what resource management is and what that resourcing function can bring to the table. So it's interesting. One of the things that you touched upon was the idea of having enough people, right? And actually being able to execute on the work. So I'm curious then, does this new era signal maybe perhaps a return to the traditional leverage model within an accounting firm of having kind of that pyramid structure? Is it more of a departure from that? Is there more flexibility? Where is your mindset there?
Yeah, listen, I believe that this is going to overall drive an increase in that almost pyramid structure that used to exist. In that, fundamentally, I believe that the partners of these firms are spending too much time, what I'd say, on the tools and not enough time spending with clients. And I'd say that the senior managers are doing too much of their time doing managers and senior managers role rather than thinking about taking things off the partners and developing themselves. And that goes all the way down the funnel, all the way down to a trainee or somebody doing summer experience. Actually, if you got that structure right and you had the right number of people in each different roles, then they would get given both the experience that they need and to deliver the role that they've been asked to do, but also the opportunity to step up and do what the next person is doing and take that training and development on. And because of the old model, people were hiring after they'd won the work rather than before they'd won the work, right? And so everyone was operating slightly hot. One manager too short, two assistant managers too short, three grads too short, because actually we couldn't afford to hire them until we'd won the work. And I think this mindset about shortage of good people, not shortage of good clients, means that, you know, I'm lucky to work with two accounting services firms in the UK. And we fundamentally changed that mindset to we are always in the market hiring if there's a good person. So we've told the recruitment market in the northwest of England that if there is a good audit senior, we are always in the market for a good audit senior. And that has done two things. One, this firm was probably still doing very well for its clients, but a 3, 4, 5% growth year on year. And that's both in people and in revenue, right? And number of clients. In the sort of 2 years we've been working with them, we've doubled that workforce by empowering the guys to go out and hire. Some of that was fixing the structure that was there before, right? Some of it is getting the partners off the manager's job. That very stressed manager who's really doing the work of 3 managers, getting some backfill, right? But then also a bunch of it is hiring ahead of the curve and putting that training and development into the current staff base for the future. And so I think fundamentally we've transformed that structure from being relatively flat or getting flatter to back towards, hey, we should have people at every grade and every learning stage and every development stage, and we should be pulling them through faster and faster and giving the good ones an opportunity to take a step.
That's really interesting and kind of touches upon numerous areas of the talent attraction strategy in terms of not only attracting the talent, but deploying them and aligning them effectively throughout the course of the year, which is so fundamental to the basic tenets, right, of what resource management is at its core. So it's definitely interesting. I think it really, what you said in a good way, kind of flies in the face of this opinion that, look, now that private equity is involved, that means everyone working in an accounting firm will be completely overutilized and more burnt out than ever, right? That's kind of that's the fear.
Yeah, and that makes sense because one, reputation of investors is to make profit, right? And it's to not have people in their cost base that aren't generating returns. But and for some people that will be true. Actually, I'd like to caveat that. Hey, some people investing in this sector, they're doing it because they want to throw as many firms as they can together as fast as possible, realize some cost synergies, get out before everyone realizes that that's the wrong thing for the firm, that's the wrong thing for the clients, that's the wrong thing for the staff, right? And so, listen, I'm sure that is happening. I know that is happening. But for a lot of people who really like the sector for its long-term characteristics, its long-term client relationships, its long-term staff tenure, you know, this is a thing where you'd hope you'd have somebody working there for 20 plus years, right? And there aren't many industries left where that can be the case. Our mindset at CowCorner is about the long-term growth of the firm. And actually, yes, that investing in the staffing is going to have a short-term impact on that gross margin, but actually it's not as long as you might think, but also it's the right thing for next year. It's the right thing for in 4 years' time. And so we'll be making more money in the future, right? So it's flipping the thing that you're worried about on its head, and it's saying, hey, yes, we are going to measure. I do want you to try and generate growth. I do want you to be working on profitable jobs, but I want you to be doing that for the next 10 years. And so I don't want to burn you out. If the staff aren't happy, they'll leave. And if they leave, we won't be able to generate the revenue, right? So that's our approach anyway.
Absolutely. Hence why the resourcing, data, forecasting, all of the ability to do that and harness it in a powerful way can be really a game changer, I would say, right? In being able to do that.
Such a game changer.
That is really interesting. And something you said was really intriguing too, is as it relates to the longevity of a career within this space. One of the things that has certainly happened over absolutely the last several decades has been this shift in terms of the traditional graduating from college or, university, coming in and kind of staying with this organization until retirement, where in the accounting space, that partnership model has certainly lent itself to at least having the foundation for that sort of a career.
Yes.
And then in recent years, we've certainly seen that switch. I think, the pandemic certainly had flipped a number of things, around from that standpoint. But it's interesting to think about then the impact that this model will provide on even the campus recruitment strategy of folks that previously had. There are absolutely, kids, I say kids, but, folks within the university setting that are meant to be joining accounting firms, and they have it in their mind that they'll stay for a number of years and they'll move into industry. And I think what you're describing is that might change.
Yeah, well, listen, there will always be people who use this as a great foundation and for development and training to do something else. Listen, I'm an example of that. So pretending that that's not going to happen still would be wrong. I think, I trained at PwC, and for every 10 people who started, you'd only find 5 who lasted after the minimum lock-in period. After the training contract, you'd only find 3 managers, you'd only find 2 senior managers, and you're lucky if you found 1 partner, right? So that is still going to be true. But I think what some of the investment in private equity is going to do is it's going to create an environment of growth and an environment of excitement and an environment investing in technology. And if you think about what the people developing, the young people coming through these organizations, lots of people were leaving because this industry was stagnating. Lots of people were leaving because it was, dead man's shoes to get progression. And lots of people were leaving because there were technology tools out there that could make their life easier and the days more interesting, but there is a reluctancy to investing in those things. And I think the shake-up that the industry is having because of the investment in PE and the longer-term mindset in investing in growth measures is actually going to be much more appealing for the young people. If I think about the partner group and the future partner group that we work with in our 2 firms, they're the most excited about our being there, right? Because they're the ones that are desperate for change, not fearful of change. And I think that what that's going to do in the good firms is we're going to get back to an attrition rate that is a lot more manageable. Listen, that's different in different at different grades, and that's different in different countries. But we were seeing that creeping up year on year on year on year. If 10 years ago you were losing 10% of people, then 2 years ago you were losing 20% of people every year, right? If you were losing 15, 30, it was going up and up and up. I think you'll see that attrition rate is going to start leveling off. And more importantly than that the good people you want to stay, you'll be able to retain.
Yeah. Yeah. And that is huge. And again, speaking from an RM lens, that is a huge and very significant factor as part of certainly planning, but really the quality of the work and the quality of the experience that people are having as part of that firm, right? And so I would think from a reputational branding perspective, that's got huge implications there as well. And shifting slightly, but kind of touching upon what you just described, as you know, and I'm certain many of our listeners as well, many accounting firms are subject to regulatory review of some kind, either through formal inspections because they audit public companies, or at a minimum, I would think they engage in some sort of a peer review process, right? And so part of that my understanding is an assessment of the staffing of those engagements, if the staffing was done properly, right? So if the folks that are the comprising an audit team and the composition of that audit team was appropriate in terms of skills and experience and training, what have you. And so
Yes.
can you comment on what impact, if any, you would think that PE then would have on either audit quality or rigor as it relates to compliance with those standards?
Yeah, definitely. So one of the byproducts of the PE investing is actually that there are more and more firms that will join forces, right? So there will be more and more consolidation in this industry because fundamentally there is an organic growth play and an inorganic growth play where actually bigger firms are more valuable. So in the self-interested investor that they want to grow a bigger firm, but equally a bigger firm has a bigger resource budget to be the person who's leading in compliance, who's leading in technology, who's leading in making some bets that in investment that will hopefully pay off in the long term because you want to create a sustainable firm. And equally, those multiple firms that you've acquired or that have joined forces will all be at a different level of maturity across those journeys. And there'll be a requirement to try and take the best of all those different firms and learn from each other and then create, the best firm you can. I think the compliance regulations have only ever gone up in this industry, and the regulatory and compliance burden has increased again, much more so over the last 10 years than it has previously, as we focused on the conflict of interest between things like audit and consulting and marking your own homework. I think that the double advantage of a private equity investor is going to be that scale and the ability to invest in things that drive compliance and rigor and best in breed, but also an anti-embarrassment, because I can't be associated with a firm that is full of scandal or is full of abusing its market position or abusing its staff or negligence, right? And so the bar for me, I'm a regulated business with regulated investors, is probably even higher than the bar that the industry bodies are setting, the firms that haven't had investment. And so I think there's a path to whiter than white. Actually, the firms that don't invest and don't take investment and don't become part of a bigger firm, that's the big threat. I think there's going to be a real divide of firms that want to stay out of this, investment change in mindset and those that want to get in it. And there's loads of benefits for both. I'm not arguing the one that I work in is the best one. But I think there'll be a risk that those that don't won't be able to keep up with those that do.
Yeah, that is really interesting. And I would say for the resource managers out there that are into this stuff, this is, at least I can speak from my own personal experience, the quality control aspect of the resource management process is certainly something that has come into play more recently as firms are really wanting to stay ahead of that, right? Of course, right? And this idea that documentation is no longer simply a client service requirement. And this is certainly something that needs to be truly focused on and acted on all year round to ensure that the quality of the work is there, that all of the things that you mentioned, right? We don't want a manager that is doing the job of 3 different people and that has all sorts of, negative implications. And so I do, and perhaps I'm an RM nerd, in this instance, but I love this stuff. I think it's really interesting to really dive into the composition of a team. And are we looking at continuity, and should we be, right? Are there different skills and maybe areas of expertise that need to be tracked in a more disciplined way? How do we as resource managers become more strategic, and in doing so elevate the function, but of course provide a more disciplined platform for a staffing process that not only is a check the box exercise, right? That's not necessarily what we're going for, but really providing something that people want to be a part of
Yeah.
and teams that people want to actually engage with, right? So I think that's super interesting. And I think, to your point, I would say you're absolutely right related to the staffing piece of it. That will only become more important. And that's where I would say, from a resource management perspective, I would like to see resource managers really latching onto that, right? Not shying away from it, but
No,
jumping on that bandwagon of, how can I become more strategic? What are the different best practices that I can bring to the table to ensure better staffing?
I think resource management and the leaders of the resource management team have never had a greater importance than they do today. I think that, and the opportunity to demonstrate and finally maybe get some credit for that importance has never been as prevalent as it is today. If you really think about running an accounting services firm, there are three conflicts that you are always grappling, and that a resource management function is always grappling, but historically silent. They are the demand from the client to get continuity of people that they like and trust and that they understand their business. The demand from the partner and the team for working with the people that they want to work with and being selfish around how they want to run their life. And then the demand from the business and around the profit margins. I would say that one of the big changes is that 3 has become a 4. I'd now say the demand of the person working in the jobs that they want to work in, getting the development that they want to get, getting the roles and responsibilities that make their career is getting more and more and more prevalent, right? So you've got needier people wanting to work on jobs that they want. You've got accounting partners under more and more pressure to grow and run their businesses. And you've got clients who've got ever more scrutiny and focus on costs, who don't want inefficiencies in their function and what they're spending on. And those conflicts have never been under more of a spotlight than they have today. They've been very, very prevalent. But put an investor in there whose whole job is to assess those things and balance those things, to keep the people and have the highest retention rate as possible, to make the most revenue and profit, and not let the partner take on jobs that don't have any recovery. Also keep the client happy, because this industry is built on recurring clients. Actually, the resource management function is at the core of all of those objectives and at the core of those conflicts. Actually, in fact, they are the person resolving them.
That's right.
It is the resource management function who has to resolve those functions. Now, there is a danger in that change that you shrink and you become more siloed and you just focus on the problem you've been given. I need to resource this job. But there's also the opportunity that you can step up and say, I should have a seat near the top table in the strategy of this firm, because I'm solving the main problem that this firm has, right? And so there's a real opportunity for the RM function to almost finally get the credit it deserves, but also take a leap and take a step and start thinking about the strategic objectives of the firm, not just the strategic objectives of the function. Does that make sense?
I could not agree more. That was so powerful. And I think it's very exciting, right? Because so I would say, from an RM, a traditional RM perspective, I will say that I believe that resource management exists absolutely everywhere, in every business. Wherever you go, someone is doing resource management. Perhaps they're not calling themselves a resource manager, but the function and the profession has not existed formally for too long. And accounting is an industry where it has sort of in certain instances. And you talked about it, Charlie, this idea of kind of the consolidation of the industry. And we're seeing a lot of that right now, right, in the market, of smaller firms joining larger firms, smaller firms kind of partnering up, right? And a lot of acquisitions that are happening of mid-sized firms and firms of that size. And that brings all kinds of layers of complexity as it relates to the philosophy around talent management, certainly around all of the different areas that you discussed as well. And part of that I think is so interesting is there needs to be some strategic collaboration at the leadership level in order to push that forward in a way that is going to be successful. at a minimum, right? There needs to be certain kind of, ground rules from a basic RM standpoint. And I would also say, partners who are listening, I know that there are partners here as well, that the resource management function belongs in conversations around things like client continuance and expansion and what that looks like. They've got their ear to the ground, so to speak, in terms of what is really happening day to day with your people, and really being able to action the change and bring your strategy to life. So that's my little plug there from an RM perspective. Thank you so much. We have one last question for you. So as we think about all of this, what would you say is the main takeaway that you want people to know as it relates to there's a lot in the news right now about PE and what does this mean and what's happening in the industry? What would you say there?
So listen, the main thing I would encourage people to take away when thinking about internally about the resource management function in particular is there is an opportunity to move this beyond a silo into a broader strategic solution and fundamentally crucial part of the firm's success or failure. And linking in the budgeting process into the resource management process, into the invoicing process, and then assessing whether a job was resourced appropriately and then was charged appropriately, and then using that information and data to go back and do that again next year is the fundamentally the biggest driver of success or failure of an accountancy firm in the next 5-10 years. And I would really, really encourage any RM specific people out there to think about the thing to the left of them, the thing to the right of them, and be that person who adds the value to the partner who is getting grief about those low profitable jobs, those low
yes.
Who is getting grief about staffing, who is getting grief about how they manage that conflict of the staff need, the business need, their need, right? There's a huge opportunity to factor in that planning, that budgeting, that invoicing, and then adding that value. And I would encourage people to think about that as an opportunity and not a risk, and take a step up rather than hide away from it. Because I think the reality is that this change and this change in investment ownership structure is going to shine a light on RM. And that's going to mostly, for I'd say 7 out of 10 people, be a shining light for the positive, and they'll finally get the credit and the respect and the sort of praise they deserve for what they're contributing towards the success of these businesses. If you're doing it well, that's going to make a huge difference if you're doing an average job or a bad job. But there are also people out there that have difficult partners, don't want to have difficult conversations, and want to think about RM in a silo rather than as part of the business.
Yep.
And there's a real danger that this shining the light will show that that isn't being run as well or as efficiently as it could be. And, that's a threat rather than an opportunity, right? Because there's a danger then that RM isn't recognized as part of the solution. They recognize it as part of the problem.
That's right.
And so that would be my biggest encouragement and takeaway is take the ownership, take the opportunity, take the lead, think about the tools that make you more valuable by using data, by using software, by using that end-to-end budgeting to billing to make the lives of the partners easier, the staff easier, the business easier, and get the credit for it. Don't be scared of the change, hide away, and try and be the barrier to all of those efficiencies and opportunities and things that they're in front of the business.
That's fantastic. Thank you, Charlie. And I don't know about anyone listening. I am super motivated. I'm ready to go take on the world and show everyone what RM is all about. Thank you very much. You've been wonderful, very, very informative. And I hope you all enjoyed this as well. Please stay tuned for more episodes. And I hope you give us a like and a subscribe. Follow for more.